The man that you are seeing on your screen is Tito Mboweni, the Finance Minister of South Africa, who in about 24 minutes is going to be presenting his budget for the country for the upcoming fiscal year. It's been an interesting time, to say it very lightly, indeed, in South Africa and other parts of the world, with COVID-19 wreaking havoc on economic policy, fiscal policy, and many other government policies, and also, of course, on economies all around the world. Governments have responded. So how will South Africa respond in trying to make sure that it can get the economy growing again? Earlier on Twitter, someone was posing a very interesting question, and I also adapted it, and then I just adjusted it very slightly. I asked the question, can you diet and grow at the same time? I think that's the conundrum that Tito Mboweni faces this afternoon. How can he grow the economy while trying to be disciplined on the spending front, but at the same time needing to ensure that he stimulates those sectors that do need to grow? Luckily for me, it's not a question that I'm going to be asking. It is a question I'm going to be answering, sorry. It is a question that I'm going to be posing to people who think about these things day and night. Let me introduce them. Annabel Bishop, Chief Economist at Investec, joins us live. Thank you, Annabel, for being part of the discussion today.
It's a pleasure, Godfrey, always.
Thank you. We also have Andrew Duvenage, is Managing Director, NFB Private Wealth Management. Andrew, thank you for coming through.
Good afternoon. Thanks for having me.
And we have Moketsi Marumo, Associate Director, Cova Advisor, as well as part of the discussion. You're welcome, Moketsi.
Thank you very much, Godfrey.
Annabel, lay out the landscape for us in terms of the challenges that the minister faces as he prepared for this budget. I made this little comment around growing while on diet. Is it possible? Am I accurate?
Yes, so I suppose maybe we're talking about growing muscle here while dieting out the bad stuff, trying to become healthier. Maybe that's the only way to look at it. I suppose really we need a change of diet. And here, we have heard before from government policy, they're looking to cut back on current expenditure. And that is obviously areas that is not fixed investment. And of course, building up areas that promote or stimulate economic growth in the economy. So obviously that's very key for us here, in that the budget is very constrained. We have very high borrowings. And of course, we've seen multiple credit rating downgrades, which unfortunately have been accelerating recently. And of course, widening fiscal deficits, while of course we also found ourselves in the place, as you quite rightly said, where we are battling to grow the economy. And of course, further tax increase would be very bad for the economy. And while there's likely to be a small revenue overrun, we estimate maybe probably just below 100 billion. It's not going to be enough to really change the borrowing trajectory. And of course, that's what's meant by this change in diet that you're bringing in. The desire to build muscle, a lean, strong economy, and cut out the fat.
Absolutely. Let me get your thoughts, Andrew, in terms of the key challenges that the minister faces as he prepares to present this budget.
Yeah, so I think as Annabel says, exactly correct, is you're not going to get much more tax yield through tax rates. So unfortunately, that's constrained. And then on the expenditure side of things, although you'll probably hold the line on the public service sector side of things, and there might be some shuffling of money around in terms of expenditure, the big problem is that it can be to the detriment of your capacity and your infrastructure to grow. So really, the expenditure side of things might slow down the debt trajectory, but ultimately what this needs to focus on is growth, because ultimately your economy simply just is not growing fast enough to increase your tax base and to increase revenue sustainably. And that really will have to be the focal point. As Annabel said, is these things have been spoken about before, but it just seems that the moves to focus on structural changes are just really, really slow in coming through. And we don't have the luxury of time given the debt load that the country faces at the moment.
Absolutely. Moketsi, just illustrating the difficulty, the challenges that the minister faces. Of course, I was trying to find out as many voices as I can in terms of their stances on this budget. I came across this from COSATU, and this is what they said. We want you, Minister, to abandon the wage freeze. We want you to sort out the SOEs, but you cannot fire people. We also want no tax hikes, but we want you to make sure that you are able to find the leakages where the money has been running away from. And we want you to create jobs, by the way, but do not do anything that increases either taxes or other burdens on the consumer. From your perspective, what does he do?
Quite a very difficult position that he's been found himself in. But one thing that I want to say is that we need to be very agile. We need to be very responsive and very innovative. The unemployment rate is rising, sitting at 32.5%. Youth unemployment, 55%. The focus for me, I think, for the budget, it should be around stimulating the economy, as most of my colleagues have been saying. And main focus should be around research and development, youth and employment programs. We need to stimulate the manufacturing sector back. So those are the areas that I think the minister should be focusing on in his budget speech.
Yeah. How do you stimulate, though, in this environment? We know the fiscal tightness that's around this minister in particular, and yet when he looks around the world, he reads figures such as $14 trillion in stimulus spending by the rich countries. We know that he doesn't have the luxury. Let's perhaps talk about some alternatives or ideas. Let me start with you, Moketsi.
So look, I mean, if one looks at what has been allocated to the Department of Trade and Industry specifically, on just focusing on stimulating growth. I mean, 2019, 2020, you look at about 6 billion. 2021, we had about 7 billion that was allocated, which was reduced to 5.5 billion. Obviously, we understand where the money has gone. So for me, I think the alternatives, if really we want to participate meaningfully into industrial revolution, we need to start investing more money on research and development. The sunset clause on some of the programs is ending in 2021 October. So that is very, very scary, and it's creating uncertainty for most people who are starting now to plan their capital investments. Do we leave our research and development in South Africa? Do we take it outside? What are we doing with those funds? So those are some of the alternatives that we're looking at.
Absolutely. Andrew, your thoughts? This is largely academic, of course. The minister has already wrapped up his budget statement. I doubt he will look at it in the next, how many minutes that remain, 17 minutes or so. He'll only begin actually looking at it when he begins reading it. But for the record, let's put it out.
Yeah, I think if you look at the state of the world, you're going to find that a lot of the recovery comes in the form of infrastructure spend globally. South Africa, that clearly demands resources, and South Africa is well positioned for that. So we would implore the minister and government to focus on the issues that are deterring investment in that space. So things like the policy clarity around once empowered, always empowered, the power, the sort of access to power and energy, those type of things. Is we should be harnessing that tailwind, because we should have a year or two where we could benefit from that, and that would be something in the short term that's quite a practical thing that they could do and that they could focus on. But time and time again, it just seems that regulatory and policy issues are standing in the way. If you look at the allocation of spectrum, I remember sitting on a panel with Annabelle last year, and we were talking about it, and a year later we don't seem to be any further ahead. And these are sort of the short-term wins that you could focus on the practical things, because it's easy for us to sit on the sidelines and talk about reform. It's not easy to structurally change an economy, but there are short-term wins, and it just seems that almost ideologically government aren't willing to go there and go there quickly. But as I say, as we're running out of runway, we just simply don't have the luxury of low debt to GDP and using debt to try and reinflate and get our economy going again.
Yeah, we're going to ask Annabelle to remind us again of those broad macro numbers, but it's an important point you make around the need to make a move, because I think you say about a year ago, I also remember about a year ago, or perhaps slightly under a year ago, more than a year ago, we were sitting on a panel where we were talking about the government's infrastructure spend, and where there was a whole lot of noise that was made about the fact that the government was going to make sure that this economy is going to emerge post-COVID-19 in a stronger position, because we're going to spend on infrastructure. I don't know any big projects that have been spent on infrastructure, but perhaps Annabelle can help us on that front. Your thoughts, Annabelle, as we now want to focus a little bit more on the macro numbers, but I wanted your thoughts just in terms of what easy wins Tito could do without having to open the Pandora's box that is Operation Lindela and all the other things that he needs to deal with about the ANC in the background.
Operation Lindela is where it's at, but anyway, look, I think it's important to note that certainly we find ourselves in a situation where, we don't have even in a good financial year, much opportunity for a finance minister to do anything, to change the structural problems in the economy, to change the political policies, other than to suggest them, which the National Treasury and Minister Mboweni has in their growth plan. But of course, to actually implement any structural changes, these actually need to come from government themselves. They need to come from the regulators. And here, I think a very important point. Yes, we actually have seen some progress on a regulatory perspective. We've seen, the implementation of e-filing and obviously move to the biz support platform to start a new business quickly. And that's the point I really want to make here. If we're looking for low-hanging fruit, is to move from an electronic perspective more quickly to reduce interaction between regulators and obviously the private business sector, even the private households, if we look at home affairs and the difficulties faced there. So to try and move on to electronic platforms is what the World Bank itself also recommends as a very quick and rapid way of interaction for business, for private individuals, and the government. Also reduces the opportunity for corruption, for bribery. It reduces the time spent in interactions between these two or three parties. And of course, the big problem certainly is that the longer these interactions are, the greater the appetite, if you will, or perhaps the urge to bribe someone to push it through. And of course, that's what we're trying to eradicate in South Africa. So, a strong anti-corruption drive going on at the moment. But I think, turning to the macro figures, turning to fixed investment, certainly there's been a lot of noise, as my panelists have said, about infrastructure investment in South Africa and encouraging more investment. Attending these investment summits, I basically have seen a beauty parade of investors coming up and stating, what they're going to invest in South Africa. But it actually rings in a way to you that, they might have invested that anyway. It's not necessarily something they wouldn't have done if they hadn't been asked to come up on stage. So it's good, however, obviously to hear about it. But really, for the macro numbers in South Africa, for me, the biggest problem is and it does relate to the budget. If you look at GDP growth, it's really slowed down from above 3% at the start of the last decade, 2011, really 2012, but certainly 2011. And then, of course, down towards 0.2, 0.5% at the end of the decade, 2019. Now, part of that has been due to higher taxes. And of course, that's very pertinent to the budget. We've also, of course, as well seen a downward cycle. In the business cycle, it's obviously been a downward trend. So that's very negative as well. And, focusing as many people do in the debate about what should be done about South Africa on increasing taxes, on perhaps bringing in wealth taxes, on bringing in corporate tax, on just increasing taxes in general. It's very unhelpful for growing the economy. And the point I want to make is this, that essentially in South Africa, we are not going to get out of this huge debt trap that we're in. I think maybe you want to touch here on some of the debt numbers, and of course peaking at 95% to GDP in 2025-26, or over 100% if you take in the state guarantees to the SOEs. These contingent liabilities push it to over 100%. Bringing down that massive debt trajectory will require very strong economic growth. And unfortunately, economic growth last year contracting 7%, maybe this year expanding at 3 or 4%, but that will depend. That is caused by the statistical bounce. Next year, we think it could drop back down to 1%. These are the big structural challenges and problems in South Africa, the macro issues, if you will. Yes, we're addressing it through trying to work down the electricity capacity issues. And of course, that's one big constraint in economic growth, along with other services provided by other SOEs. But to me, these are the big issues today.
Are there any surprises that you could potentially bring in his budget statement today on the broad macro front? And I'm talking your deficit numbers, I'm talking about your debt to GDP ratios, etc.
Look, I've dropped my forecast down, if you can make a forecast, but certainly on the debt for the 2021 fiscal year where we're finding ourselves. I don't really see much change because obviously from that perspective, we're already in the year, if you know what I'm trying to say. The year's finished, ends in March. And of course, the good figures that came through in the December SARS corporate tax numbers, which obviously caused us to look that we might be getting this revenue overrun of maybe around 100 billion, although possibly close to 50 to 100 billion. That's not certain. We haven't had the last 3 months of collection, and I don't think we're really going to see much of a change to this year's debt to GDP borrowing trajectory. But going forwards, the 2021-22, I've penciled in a figure of about 85 or 84.5%. They've got they've got a figure of 85.6, so maybe a 1% lower. Going into the following year, I've been a bit bold. I've got 88.5%, and they've got 90%. And then going further out, probably a similar figure. So not an enormous change, but maybe Godfrey enough to cause the credit rating agencies to wait until late in the year to downgrade us if we do lower this trajectory.
Yeah, it's interesting because as we speak, of course, the rand is around 14.56 or thereabouts to the dollar. We've got the all-share index up almost as if celebrating some good news that the minister may bring. We will know in about 9 minutes or so. Andrew, if I can come to you. So I want to share with you research that I picked up as I was preparing for the show. It came from Peter Atad-Montalto from Intellidex. And he says he is expecting exchange control reform. He's very specific. He says we could potentially see here the government trying to replace exchange control manual, but in a substantially reduced and reformed form. He talks about the prudential limits on investment exposures, including the basic 30% assets under management institutional limit being brought down, and then also on a personal level, improving that to 10 million per year and $1 billion for companies. Is there anything else in the markets, for the markets at least, that they could look forward to in this budget? Or is it one of those where we just hope if it doesn't touch taxes, that's okay?
I don't think that there are going to be any major surprises. The things that markets would react negatively to is if there was almost a reversal on the position which he put forward last year, which was to stay away from hiking taxes. Is if there's sort of a U-turn on that, I don't think it will be well received. On the regulations around pension funds and prescription of assets, we think it's unlikely, outside of maybe opening it up to infrastructure projects. We don't think that they would go down the route of prescription at the moment. Yeah. And then once again, is they'll look towards the policy on expenditure and whether the minister holds the line on the public service sector wage increases, and we think that that's likely that he will, and let the Constitutional Court process play out, as well as the next round of negotiations. But really the things that are influencing the rand is where you started, and the market are not South African linked and are not linked to this budget. They've got a lot more to do with the Fed's announcement yesterday on its bond buying program, and as well as on commodity prices that link to the rand. So we do have some tailwind, some risk appetite, and we're in a fortunate position that at least we do have a relatively strong rand. I think we'd be in a far worse position if we were still trading at 19s to the dollar that we saw in sort of April of last year. So we'll take that as a small win for the time being. But unless there are anything that's really untoward that comes out of this, which we don't anticipate, it's unlikely that the market reacts significantly to his speech.
What would the international rating agencies like not to see in this budget that could potentially make them change their minds, in your view?
If that's posed to me, look, I don't think that there will be a huge amount. If you look at the bond market, I don't know if the bond market's actually buying the debt trajectory that's being put forward by government. If you look at South African 10-year bonds, they historically have traded on around a 1.5% premium to emerging market peers, and we're currently sitting at north of 4%. So you can almost infer from that the bond market is pricing in that we will overshoot those debt estimates. And I think to a large extent that is understood by the rating agencies. I think what could be positively taken out of this budget or out of the process that's going on at the moment is if this tax overcollection, and I say that in inverted commas, in that we'll still be 200 billion rand short of what we were estimating in February of last year. So it's not that it's an overcollection, it's just not as bad as the train wreck that was put forward in October. Right. But if that is the case, is potentially Treasury has the ability to start decreasing its issuance of bonds, and that could be well received by the bond market and hopefully bring yields back a little bit and decrease the cost of debt. But I think the rating agencies will really see if he holds the line on expenditure. I don't think there's expectation on fireworks on the revenue side of things.
Yeah, interestingly, actually, Peter Atad-Montalto at Intellidex says that he thinks the revenue overrun is around 174 billion rand. That number is going to be coming up very shortly. We hope to see if he was correct. Moketsi, if I can come to you. So what do economists say? And I think the wise people generally say you ought to use your crises well. When you judge what Tito and the president have done with this crisis, have they seized it as an opportunity to, one, implement faster the reforms that we've been talking about for such a long time, and also to take on some of their detractors inside the ANC and outside of it, to implement difficult things that would have been unpalatable if there wasn't a crisis?
Godfrey, at the micro level, I could say that, government has been pretty much slow. Obviously for me, I've been monitoring the movement around the Department of Trade and Industry, where most of the support for manufacturing sector is sitting. So the responsiveness, it was almost like the department has gone into a lull. There has not been a response in terms of all the applications that have gone through, in terms of the investments that people are making on the ground. But on the other hand, I mean, we've been playing a much role in the temporary employment relief scheme, which, I mean, in the contrary, in the market, I mean, people have been saying that, there's a lot of challenges within there, but we've been playing in that space. And I think government responded very well in terms of that particular program. I mean, I can tell you that, I mean, the department didn't have a system in place. They responded very quickly in that particular space.
Okay, so progress is on some areas. Annabelle, as we wrap up, I just wanted to ask you if we're likely to hear the minister mentioning the phrase zero budgeting. That's one question. Then the other question is going to be around, do you potentially see here the minister being able to utter the words, no taxes, read my lips. No higher taxes, read my lips.
Possibly yes to both, but zero-based budgeting, essentially has meant that you need to take your expenditure allocations back to zero and reallocate to every single department. And while they said they would do that, and obviously the budget would be the correct time to do it, it'd be very interesting to see if they did it today. It could actually result in some uproar as well, because obviously some departments, looking to have to cut their budgets and therefore obviously have an impact on their civil servant salaries and wages, which always are a big part of expenditure in departments as well. Could be quite key there. But, in terms of obviously moving forwards, a zero-based budget where we do cut out the fat, we move to a more dynamic, a fitter economy where we focus more on expenditure and growth, that would be very, very positive. And I think from a tax perspective, we're not expecting tax increases. And I really hope he does say no tax increases at all. If we're lucky enough to get a revenue overrun, over what was estimated. Again, as one of our colleagues said, not a surplus, because we're certainly not above where we were in the previous year, well below it. But, an overrun to what was hopefully estimated for this year. The point really is that, if they use that not to push through even increases on sin taxes and fuel prices, that would really be helpful for the economy.
Yeah. Do you see him having the political capital to be able to go to zero budgeting?
Look, I think politics is very difficult in South Africa, and it's really heated up, as we see all over the news, all the corruption charges and trials, key figures, being asked even to come to places they don't want to go to. And the point really that we're trying to make here is, he'll have the political capital if the president gives him the political capital, if the, key leaders in the presidency and government departments, they give it to him. And, we continue to hear from the ANC that, yes, Cyril's in charge. We support Cyril. And, of course, we hear the same from many people in government as well. And, we hope that there will be the zero-based budgeting. Maybe it'll just be in part, but they should have the political capital. I mean, the president who's running the country should have the political capital to allow the finance minister to do that.
Andrew?
From what we understand is certainly the president is fully behind Minister Mboweni. So he did go on a lot last year about zero-based budgeting. Inside the wage sort of space, from what we can understand, is that both the minister and the president have been resolute in their positions. So I think that there are positives, and it's not that the challenges aren't known to the leadership. It's just the implementation that ultimately is the problem.
Yeah. Is there anyone who wants to talk about Operation Lindela and whether it is indeed the panacea that we've been waiting for and it will carry us to the promised land?
Hopefully it will be.
Give me assessment of Operation Lindela.
Look, we can't get away from the fact that we need to improve state capacity and state capability. We need to obviously do the regulatory reforms I talked about. We need to see this electronic migration. I also believe, like Andrew does, that our president is very keen on zero-based budgeting and reallocations across the board. And of course, this is a vehicle, if you will, which has the capacity to deliver. But, the reality is that we can't expect the economy to do really well and to repeat the growth of the 2000s. And that actually was inclusive growth for the naysayers out there. As we saw, unemployment drop down to 21%, and of course, lots more jobs were created as a consequence. We can't really see a return to that tough environment if we can't allow business to operate more freely and get the support it needs from the regulators, the civil servants, and of course, increase their productivity, capability, and capacity.